Ladies and gents, you probably pay a mortgage every month, or if you pay a rent, this doesn't necessarily apply to you, but it will in a sense, and I'll explain that later. Now, there's two things that will affect your mortgage payment. That's going to be your property taxes and your home insurance. And a lot of people on the internet have been talking about, oh, my policies are premiums are rising and rising and rising. What's up? Well, we're about to get into that a little bit more and discuss it. So stay tuned. But before we get into that, let's go around the table for some introductions. I'm Rob Kyleman.
I'm Joshua Britt.
We're real estate agents and investors in the Hampton Roads area of Virginia. And also joining us, we have Rob Spurgeon. He is an agent of Shoreline Insurance Group in the Hampton Roads area of Virginia. Rob, welcome to the podcast. Thanks for coming.
Awesome. Thanks for having me, guys. This is really cool.
My pleasure. My pleasure. Our pleasure.
Yeah. Hey, Rob, so just start out and tell us a little bit about what your experience is in the insurance industry.
Sure. Yeah. So, I've been doing this most of my adult life. Kind of sad. It's insurance.
Do you care to share that number with us most of your adult life?
Well, I'm 50.
Wow.
That's a good one.
Yeah.
I think I've been doing this for probably 22 years.
Nice.
And I've owned my own agency for about 4.5 years. And it's been fantastic. I'd say that, I started out doing all kinds of insurance, life insurance, home, auto, annuities, they just want you to do everything. And I pretty much quickly kind of figured out that the medium for homeowners insurance was good for me. I established a bunch of referral sources, got in with some good companies that had good rates, and it kind of seemed like a slam dunk for me. And it kept growing and growing, and finally got to open my own shop. And now, it's interesting that, we're going to be talking about home insurance because that's my bread and butter. I like writing. Home insurance is the first thing that we do, every day. We also do auto insurance, flood insurance, some business insurance, but homeowners insurance, that's the name of the game for us.
All right, great, because the very first question we got is can you explain what the basic principles of home insurance is that every homeowner should understand?
Yeah. Okay. Sure. So, as Robert said, you're going to have a mortgage. You have to have homeowners insurance.
Yep.
So, for talking about real estate, we're talking about buying houses, and one of the things that you got to get before you can close is your homeowners insurance.
Mm-hmm.
And homeowners insurance is there so that if your house burns down, you're not just stuck with a big mortgage and no house. So they'll put it back for you. And it does a variety of things, not just fire. Of course, it covers your house if we have a tornado or if a pipe bursts in your wall and you have, a couple thousand gallons of water when you get home from work sitting in your living room. They'll fix that stuff for you.
Okay. So, what are, the basic principles of how it works, right? So, I have my insurance quote, Robert has his insurance on his house, you have yours. So, but how do the insurance companies, what do they do with the money that we pay? Because I feel like I just pay them and I never see that money. And I feel like I'm just the best person because I've been paying this homeowners insurance for so many years and I've never filed a claim.
I know. Are you guys buying yachts with that money? What are you guys doing with all that?
It's funny you say. I was just saying to my to one of my assistants, it's time to buy another boat. No, I think the first thing I would say is that insurance companies are they're there to make money, no question about it.
Yep.
But
Cha-ching.
cha-ching. But insurance companies are taking in premiums. And insurance, the general concept of insurance is pooling money. Okay, so you have hundreds of thousands of people are all buying their home insurance policies, and let's say it was just with one particular company, and so they're going to take all of that money and keep it all in one big pot. That money is going to be invested, so they're earning.
Oh, so this is a mutual fund then?
Well, what are they investing it into?
Oh, the market. The
Into
stock
the
market.
stock market.
S&P 500 type of stuff?
Absolutely. Absolutely. So they're just like the bank, right? You got your money at the bank. Your money is sitting in the savings account. Well, it isn't just sitting in the savings account earning you interest. They're investing that money, and then they're also paying you the interest on it.
Oh,
So
man.
insurance companies, absolutely. So if they've got, $250 million in assets, cash, but not cash, they put it into securities, right? And it's so they are they're making money off of your money, no question. That's not a secret. But they're the idea is they're pooling that money. And so if you pay $1,000 every year for your insurance and you never make a claim, great. And then Robert's paying $1,000 every year and he makes 2 claims, and they pay his out with everybody else's, pooled money. So the game is to bring in more money and earn more money through their investments, and then versus what they have to pay out and their losses.
Well, wait a minute. What if they make bad bets? Because I know they're not going to be as good as politicians' track record in investing, but
well, I mean they'll ride the wave, no question. I think that you see, more recently we're seeing insurance rates going up because they're having more problems with, inflation is one, but weather-related events is certainly driving a lot of the costs. But when the market goes down, then insurance companies they'll maneuver in another direction to make sure that they're making enough money. But it's simple economics, honestly. How much money's coming in, how much money's going out, and and are we making? And not we, it's not me. I'm just an agent. But is the insurance company making? Are they making money or are they losing money? And if they're losing money, then something has to change, right?
Well, you guys must be making a lot of bad bets there, because this doesn't make sense to me, because right now, the stock market is up really good.
I know, S&P's highest records and stuff like that.
It makes no sense to me that right now that homeowners should be bearing the brunt of a higher cost on their insurance if the money is being taken and put into investments. That doesn't make sense to me. I don't know. Now, does each company
hold on?
Go ahead,
so,
go ahead.
All right, so it's not only investments, right? So it's losses and insurance companies. So I have an agency and we're a broker, so we work with lots of different insurance companies, and so they all want us to sell their product. Of course. So then they have their sales reps and they come in and they rah and they say, well, this is what we're offering and this is where we are and this is it. And every single one of them for the last, let's say 18 months, we're at about they're all saying we're all hovering somewhere around 110%. And what they mean by that is that their total money that they're spending, like what they're bringing in and what they're putting out 110% versus bringing in 100%.
So they're losing 10%.
Yeah,
every month, every year.
A year.
Yeah,
and just in their spreadsheets, and so they're losing money, for sure. And I think there's a lot of factors. So the stock market is helping them, so they're not losing as much as they would otherwise.
Yeah, if it wasn't doing
right?
as good, we'd be in real trouble.
Yeah.
Wow.
So, let's talk about like the elephant in the room, right? Is the weather, right?
Yep.
Climate change. People love talking about that.
Yeah, we're going to get to that next, actually. That's the next thing on the topic.
You just want to jump right there?
Yeah, sure, exactly. So how significant is the impact of natural disasters and climate change on insurance costs?
Massive. It's massive. So, all right, so I'll talk to somebody here and they'll say, well, how come, I know that Florida's getting hit by all these hurricanes. We haven't been hit by a hurricane here since 2003. Why are we suffering? And so, again, it's the pooling of money. And we're not just pooling money here, but we're pooling money everywhere. And so what's happening, and you see it on the news, nobody can get away from it. There's more hurricanes. There's the wildfires. These wildfires, we're lucky here. We don't really have a wildfire problem. Every time they have a wildfire, billions and billions of dollars lost to insurance. All those houses that are burning down, they're total losses, and they're paying for the house. They're paying for all of their clothes and furniture. They're paying for them to live somewhere else. So it's not just that was a $400,000 house. All right, that's $400,000 in a loss. That's $400,000 plus probably another $200,000 for all their clothes and furniture. It's probably another $65,000 or $80,000 for them to live somewhere else for a year while they're trying to rebuild their house. And so wildfire, hurricane. Then how about that huge freeze they had a couple years ago in Texas?
Yeah.
Huge, massive losses. You're talking about home insurance losses, car losses. You're talking about businesses, and everybody's got an insurance claim, and it keeps coming. The big blizzards that they had in the beginning of the winter this year, same thing. The multi-car pileups, it just keeps coming. So the insurance company is reacting to these higher losses, and they are needing to I would say, I don't know if I want to use the word overcompensate, but they are trying to compensate for what's happened in the past and prepare themselves for this to continue happening.
Well, they have, this is according to money.com, said that where home insurance prices are rising the fastest, number one, Florida, 68%, and that was from May 21 to May 2023. So Florida, 68%, New Mexico, 47%, Colorado, 46%, Idaho, 46%, and Texas, 46%. Does that sound about right of what you're hearing? Like Idaho? How is Idaho rising?
I don't know very much about Idaho.
I don't think anybody does.
Yeah, right.
They do potatoes, man. What's going on over there?
Seems fairly safe.
Drop the comments below. Let us know about Idaho. What's going on in Idaho?
Maybe they just are. They said, well, there's an opportunity to make some extra money from Idaho. I can't say. Texas is an insurance nightmare right now. It's amazing. I've never really been to Texas, but I'm hearing about it from the insurance carriers, and Texas is massive. There's so much housing, and insurance companies are in deep in Texas, and they're getting weather, and they're getting hailstorms, they're getting snowstorms, they're getting rain. The climate change, I'm not a meteorologist, but I'm a little bit of a weather nerd. And so it's been documented. They know that with the warmer average temperatures, that the rain, the storms hold more. The atmosphere holds more water. So then when it rains more, and more rain, harder rain comes down faster. More water intrusion. That's an insurance claim.
What about Colorado? It's snow and weed, legal weed. What's going on over in Colorado? Have you heard anything from your?
They're getting stoned and burning down their houses. Actually, you know what? Colorado wildfires.
Really?
No question. Wildfires, Colorado, huge problem. There's a little town right outside of Denver, huge wildfire, and basically the wildfire just went right into a community. It's like a neighborhood community. It's like a suburb. Every house, every house,
Wow.
for as far as you can see, every house just gone.
So how is that? If like a big wildfire is happening, do you imagine like all the insurance companies being like, oh, not it? Is it like that?
They're shitting their pants.
Yeah.
For sure. No question.
Okay.
There's no question. So, all right. So there's another interesting thing. I think it's interesting. So in the insurance world, there is something called reinsurance.
Reinsurance.
And so what happens is
Sounds like a redo on insurance.
sort of. So insurance companies, they're managing their risk.
Yeah.
Okay. The risk is, all right, we've got, 500,000 houses. And so they want to insure against that wildfire where it takes out every single house, or the hurricane where it comes through and it blows off, every other roof for a 10-mile swath, okay, or a tornado or whatever. So a catastrophe. So reinsurance is kind of like so what happens is the insurance companies buy more insurance. So you have a little water leak, you got a $10,000 claim, they're going to take care of that right out of their pocket. No big deal.
So insurance companies are buying their own insurance for themselves?
Correct. So they're buying. So I'm going to explain it. So a little thing happens. You insure. They're going to pay you, right? No big deal. But we have that hurricane.
Is this business insurance? What is this?
Homeowners insurance. Let's just all right, so follow me.
Okay.
Let me rip here.
Yeah. Go ahead.
So all right. So hurricane comes through, cleans out of town. Terrible, right? And the insurance companies are going, oh my God, like this is going to be all of the money that we have. We're going to have to cash in all those mutual funds, and we're going to have to give them all of our money. No, they don't want to do that. So they have bought another policy that comes into play when they hit a certain number. So if they say, all right, we had an event, hurricane, and we're estimating that it's going to be $250 million. That's actually small.
Yeah.
And their reinsurance starts at $100 million. So the insurance company, it's kind of like the insurance company's deductible or something, right? So the regular insurance company, they're going to pay their $100 million, and then they're going to flip the additional to the reinsurance company. Okay. Oh. So the reinsurance company is going to pay the little insurance company the other $150 million or whatever the big, right? We were talking big numbers here.
Yeah.
They're going to pay that. But they've been paying the reinsurance company premium. You pay the insurance company your premium, and then the insurance company works a deal with the reinsurance company, and they buy
their premium.
They buy the catastrophe. The insurance companies, they're the big boys you've never really heard of, right?
Yeah. Who are they?
Nobody knows, man.
Nobody knows.
Like the Wizard of
Sounds
Oz.
like the BlackRock and Vanguards behind the scenes.
Maybe Blackstone.
I mean, you hear. I mean, obviously Lloyd's of London. Biggest insurance company in the world, or one of them. But there's other insurance carriers you've never heard of them. Maybe they're European, or maybe they're Saudi, or I mean, who knows, right?
Yeah.
Somebody, another carrier with tons of money. So what's happened is, now here we go again: wildfires, hurricanes, big weather events, $1 billion claim, $1 billion claim, $10 billion claim. The reinsurance companies are paying those. And the reinsurance companies came out last year, a little bit the year before, and they said, okay, everybody, we're losing money now. Our rates are going up. And I'm not a stats guy, but the numbers that were being presented to me and we're talking in conversations were 40 to 60% rate increases on the reinsurance. So
you guys are getting hit, or the insurance companies are getting hit.
Insurance companies are like, so basically one.
I say you guys.
We're all in it together.
Yeah.
The insurance companies are paying out, it's a bill for them. Just like you've got your insurance bill, they got their insurance bill, right? Well, their insurance bill just went up dramatically. And it's not just they're saying, it's a negotiation. They have to re-up their contract every year. And so they're the big reinsurance companies saying, we're raising your rates and you better get your losses down.
So what happens when a company takes a shit? Does that mean the reinsurance company no longer covers their six, so to speak?
I don't understand your question.
So, so insurance companies, I was reading, have gone out of business or filed for bankruptcy. Okay, so why is that? Is it because they tapped out of all the funds that they had and plus the reinsurance?
Yes. Yeah.
Okay.
Yeah, that's exactly right. So they did not manage the money well, and they're either can see the writing on the wall, and so they're just like, we're gonna go out, or sometimes they literally become insolvent. They have to be bailed out, and so
bailed out by who?
Bailed out usually by the state.
State?
Yeah,
like taxpayer money?
Sort of.
Oh,
it gets deep, right? I mean,
I don't know where this. I don't like where this is going.
Oh my God, it's ridiculous.
But that's okay.
I could bore the crap out of you.
No. Back to the taxpayers at some point.
No, whoever's watching Real Estate Talk podcast wants to know about everything related to real estate. So,
all right. So here's the thing about insurance, and here locally, because that's what I do. I do insurance locally, but this happens everywhere. But you have I call it preferred insurance companies and standard insurance companies. And that's how I refer to them. Most people do because it's easy for the clients to understand.
Okay.
But the big difference is you have admitted insurance companies and
They admit their insurance company?
Yeah. they just right in there. So admitted and non-admitted. So admitted would be the preferred, and what means is that the state, like the state of Virginia, has their own Bureau of Insurance, and they regulate all the insurance companies that come and work in the admitted market in the state of Virginia. And then, so you have to file with the Bureau of Insurance and say, these are what our rates are, and these are what our, these are our parameters, and this is how we do things. And the state says, well, you're not allowed to do it that way, and we like you to do it this way. And they work it all out, and they all agree.
All states are kind of different then, I imagine.
Yeah, but they're all doing it. Okay,
Yeah.
and it's good. It's good for us. It's part of the government,
Keeps
right?
folks honest.
Yes, sure, yeah.
Yeah.
And so by being admitted, one of the parts that's involved in that is if the insurance company does become insolvent, the state will help them pay their losses.
Sounds like an FDIC sort of.
Yeah.
Took the words out of my mouth.
Okay.
Yes,
Yeah.
same idea. So if you're not admitted, you're dealing with the insurance company directly, and if they do go under,
So if they're
That's
not
it.
admitted, if you try to file a claim, you're pretty much out of luck then.
well, if there was a catastrophe and that company became insolvent and said, "I'm sorry, but we've run out of money," that's it.
That's similar to
yeah,
those
that's very
solar panel
important.
companies that go away.
Yeah, so like how do you as a homeowner know if you have a preferred company or you have a knockoff company? Like how do you know that? Because that's a very important question. 'Cause
Yeah,
I'd be very upset if this happened to me.
I'm going to go home and check my insurance company after this.
It is not unusual. There's a lot of we sell a lot of that policy because there's a place for everything, right? Like some people aren't qualifying for the preferred rate, or some people maybe they qualify for the preferred rate, but it isn't so preferred because for whatever their situation is, the insurance companies, they're all saying, yeah, sure, we'll do it, but only for X amount of dollars, and that X amount of dollars is way higher than what it should be because they're basically politely saying we don't really want you.
I'm
It sounds
nervous
like
now.
subprime mortgages. Like what is happening here?
Yeah, so sure, and and they're looking at location, so distance to water. They're looking at the condition of your house. They're looking at I want to say they're looking at your credit score, which is really what they're looking at, but they call it an insurance score. And so, and the standard or the non-admitted carriers are going to be, they're willing to do things that are a little less beautiful, right? And so that's just created by the market.
Why do they look at credit scores? Is it because, I hate to insinuate, but is it because if you have a higher credit score, you have less debt and you're likely to pay for damages to your house yourself?
Sure. Yeah, absolutely. Wow. I think that, somebody, and this isn't me talking, I'm just telling y'all what the insurance industry is doing.
Sure, yeah.
In the insurance industry, I mean, they got these, well, they're statisticians, math,
Yeah.
I mean, they're actuarials. They're figuring out every single angle. And somewhere along the line, probably 10, 15, 20, 25 years ago, they figured out there's a correlation between claims and credit. And so, better the credit, probably less likely that you're making claims. And
I feel taken advantage
little
of.
claims. If you have better credit, maybe you're. I'm just free forming here.
Yeah, no, go ahead.
Maybe you take better care of your house, right? Maybe you can afford to take better care of your house. And they found that correlation, so it makes a difference. And everybody's got their situations, right? And so, I mean, that's how we approach it at our office. We certainly ask them one of our probing initial interview questions is how's your credit? I just want an honest answer, and people are usually pretty honest. They'll go, and I say, all right, no problem. And then when we start running the quotes and you see the results that come with that, and no problem too. I agree. Like we'll put you in the best possible spot to make sure that you get the best rate. And these non-admitted standard policies, we've never had one go under. They get good ratings. They get all the same coverages. They get all the parts and pieces. And we tell them, we say, listen, this policy is the best price for you. Okay, it's got all the things that the preferred insurance company has, but the price is better. People usually want the price to be better. No question.
Yeah.
And then the idea is, if you have a claim, are they going to pay? Yes, of course. You have a contract. They're going to pay. Are they going to be a little slower? Yeah. Are they going to be a little stingier in the, because everything's a negotiation.
Yeah.
Are they going to be a little stingier? Yeah, for sure.
I looked at kind of the average cost of home insurance. If you had 0 claims, the average annual cost is $1,933. This is according to Policy Genius. So 1 claim around $2,101 a year.
Okay.
3 claims at $2,916. 5 claims, oh my God, $4,407.
5 claims, 3 claims, you're practically uninsurable. For sure.
Is that it's 3 claims in your entire lifetime, or is that in a certain period
months,
of
a
time?
year?
These are good questions. They look at for a long time the standard look back was 3 years. Now they're looking 5 years, some 6 years. So if you have 3 claims in the last 5 years, you are definitely in the non-admitted standard market if you're lucky.
So you don't get the FDIC insured insurance company. You got to go to one of the knockoffs.
Absolutely. And then if things get really bad, and then if you have 3 claims, especially if you have 3 water claims, because they hate water claims because they mess up everything.
That's most of
right?
Florida.
Yeah. Well, and I mean more like pipe leaks, your hot water burst, your hot water heater burst, or your roof kind of is in bad shape and it keeps leaking.
And you just keep patching it.
And you keep patching it and making claims.
It.
And they're like, no, man, we're not. Why would they sign up for that again? So there's an insurance plan that's offered through the state. So you can go there. That's that's the last ditch effort. It's available for you when you can't get insurance anywhere else. And the coverage there is it's okay. It's definitely thinner. It's supposed to be thinner because you're there for a reason. Things have gotten so bad. So what happens a lot of times is with these multiple claims is people want to try to use their insurance for little stuff. The insurance industry, from the company standpoint, they call those nuisance claims, right? Right? You have $1,000
annoying claims.
Yeah, you have $1,000 deductible, and I got a brown stain on my ceiling because the toilet was leaking. Yeah, come and fix it. Well, they're obligated to fix it. That's the deal, right? And so maybe by the time the contractor comes, you mentioned to me earlier, you got work done. The contractor says, "Are you using your insurance?" Yeah,
it seems like that. Every time you have a job that needs to be done, then one of the first questions out of their mouth is, "Is this going to be an insurance claim?"
Exactly. Which it can work. It can cut both ways. But you make a $1,500 claim. All right. Well, it's on your record. And by the way, you had $1,000 deductible, so you got $500 from the insurance company. You spent $1,000, and
it raises your premiums $200 a month or something.
Well, maybe $200 a year.
$200 a year,
yeah, which is not the end of the world, right?
Yeah.
You're still ahead. But let's say that you did that, and it was March, right?
Mm-hmm.
Okay, and or maybe it's not even that egregious. Maybe it's $1,500 that the insurance company paid, and you paid $1,000, right?
Mm-hmm.
Okay, so that's a little bit closer to reasonable. But in the summer, we have a hurricane, all right? And now every single shingle's off your roof, and you got a tree branch as big as your thigh is coming through the side of your house, because that's what happens, right? And now you got a $40,000 claim. That's what your home insurance is for.
Yeah, the big catastrophic stuff.
Catastrophic. That's what it's really designed for. You have a kitchen fire.
It's not a home warranty.
No, it's not. Buy your home warranty from your real estate agent. Do you guys know a good real estate agent?
A few.
Yeah. But
Couple.
I don't recommend any home warranty companies. You know why? And
They never want to cover
They
shit.
don't
this
pay
is probably
anything
a
anyway.
whole nother
Right.
podcast here, but yeah, they don't pay anything. They
No.
like, nah, it was pre-existing. That's not our thing. But I do got a question for you. Do you think that the cost of labor on the contractor side of the things, also helps to push those premiums up? Because
Like for home rebuilds and shit.
not even just for that, even just your standard small claim, the cost of labor in any pretty much skilled position has gone up over the last few years since COVID. And we had builders on last week, and they were telling us about what they were paying electricians before COVID. They couldn't dare offer them that much money post-COVID because they want what they've been used to getting. So has the lifestyle inflation of the contractors helped push the premiums up as well?
100%. Like, for sure, no question. The cost to mitigate a claim, right? So you have the water leak is an easy one, right? So let's say you have a pipe burst, drywall, flooring, swelling, insulation. It's going to be $10,000 or whatever, right? Well, it's I don't know what the labor cost is, for that, but no question, it's going to cost way more in 2024 than it did in 2019 to get that work done. And then not because 2x4s are more expensive today, okay, but because inflation, everything is more expensive. And so for an insurance company, if they were getting $1,000 in premium for a house, and today it's going to cost $10,000 to get that water claim fixed, whereas it was going to cost $6,500 back in 2019. Well, I mean, that's pretty simple. Well, $1,000 isn't enough premium for us to be charging now. We're going to charge $1,500.
Yeah.
Well,
try to recoup some of that money back.
Yeah, that's right.
What happens if you have a catastrophic thing like that? Well, not a catastrophic, but let's say that water leak that costs $10,000, right?
Yep.
Let's say that we hire a contractor to come over and they give a certain amount of money, but I was like, you know what? These guys are overcharging. I'm in the real estate industry. I have a flooring guy. I have a drywall guy. I got a roofing guy. I got all these guys. And they come in and they do it much cheaper. I mean, as the insurance companies, would they give me credit for saving the money on top of everything?
Sure. So, an insurance claim can get paid out a lot of ways. Okay.
Yeah.
If it's the bigger the claim, the more the insurance company is probably going to be involved in hand-holding, monitoring. Maybe it's more like a construction draw. But if on a small claim, and you're going to call it in, you can tell them what happened. They're going to assign you a claim number, and a claims adjuster, is going to come out to your house. He's going to look at the thing. These guys are pros. It's no different than your car. You wreck your car, the claims adjuster comes. He knows what it costs. He knows what a fender costs. He knows what a bumper costs. He knows what the tire costs. He knows what all the parts and pieces. Same thing. They know what the industry costs are to fix the piece of drywall, to paint it, and he's gonna say, yeah, $150 for paint. $300 for the drywall. You got 200 square feet of laminate that we're going to replace with some LVP, right? And they're gonna tally it all up, and he's going to say, okay, I think we think that's going to cost X number of dollars, $10,000, and we're going to go ahead and give you. And again, this can go in a lot of different ways, but a lot of times what you see is they're going to say, we're going to go ahead and give you $6,000 now. And you need to go out and and they're not going to find you. They're not going to roll in like the cavalry, and they got the contractor and the crew and the subs.
Right.
Man,
Pro.
forget it. It's still a disaster, right? You got to find somebody to do the work, and you got to find somebody to do the work. They're going to give you an estimate, and maybe it's close to what they think it's going to cost. It should be, or maybe it's wildly off. But if they say, they might say, all right, we're going to give you $6,000. You get the work done, send me the bill and send me the pictures and proof that everything is done, and then we'll send you the rest. So if in your situation you're like, I can get this done, maybe they give you $6,000 and I can get it done for $5,000. Everybody's cool. You got $6,000, put $1,000.
Yeah,
in
but
your
would that help
pocket,
my premiums when it's about to go back up, or is it gonna not
going to
really
make
matter?
any difference. Claim is a claim.
Yeah.
A huge claim is going to make a big difference, but a little claim, it's on the record. And I was kind of starting to get to that a minute ago, I think, actually. And I said, you make that little claim.
Yeah.
and then we have a hurricane, and you got that huge
Big
branch
claim.
and all that stuff, right? Now all of a sudden you got the second claim. You're making that claim. There's no question you're making
Yeah.
a $40,000 claim. You absolutely, you have to. That's what the insurance is for.
Right.
But now you got two claims, and the first one you're kind of thinking, oh man, maybe I shouldn't have taken
You're
that.
almost uninsurable at this point.
Now you got a problem. Now you got a problem. Now in your insurance rate, and then maybe it's not the end of the world, but now you're in, and maybe problem is the wrong word, but it's going to hurt.
Mm-hmm.
Not going to hurt as bad as if you had to pay $40,000 to fix your house by yourself.
Right.
But maybe now your rate's going to be $2,500 for the next 3 years. But if it was $1,500 before, and you got to pay an extra $1,000 for the next 3 years or 4 years while you get that off your record, compared to paying $40,000, that's really not a bad deal. If you think about it, especially if you only have to pay a little bit of it each year, or truly your mortgage company is going to pay it for you, and then your rate's going to go up. Your monthly payment is going to go up.
Mm-hmm.
And so now they've financed it for you, basically.
Yeah, I think we complain about the cost of insurance because we don't use it. I think if you've ever been in a situation where you absolutely needed it, and I'm thankful that I have it, where if a natural disaster did come through and something bad happened, I could call somebody and get that fixed. So I think a lot of times that we do take it kind of for granted that it's there, and so we obviously want to complain because it went up $400. I got to pay this extra money. But yeah, I don't think we take into consideration, like, if you ever needed it and you had to pay that $80,000 towards getting this done, like, that's the only way you're getting this done. Either your insurance company's doing it or you're not. And yeah, you may look at it, let's say, the analogy you gave earlier, somebody who's paying $1,000, you pay $1,000 for 10 years, that's $10,000, an $80,000 claim comes in. Well, that's pretty much the rest of your lifetime. You're covered.
That's right.
The insurance company is covering you for the rest of your life, because your premiums will never equal that amount of money.
That's right. Yeah, except they'll want to cancel you because you had an $80,000 claim. I'm thinking, stay on the risk, man. Charge them $3,000. They're gonna pay it. They don't even have a choice.
Have them pay it back.
Make the money back. And in some cases they do, for sure. And then in other cases they don't.
Well, so that's kind of the unique thing is yesterday I was on a mastermind call with a bunch of real estate agents throughout the country, and I hear there's a major problem with insurance in Florida and Texas right now, where there are some real estate deals that are falling apart at the closing table or right before the closing because the insurance policy is higher than what was thought. It throws the DTI out of whack.
That's
That happens here.
Income. I was telling Robert, I could remember about 2 years ago, I could tell a buyer within a very fair deal of certainty that, hey, your monthly insurance is going to be this, and we could figure out what their monthly payment was going to be based off of how big the house was and where it was and knowing what it was. Now today, I really couldn't tell a buyer, a client of mine's, like, what their insurance policy is going to be, because I've seen them range so wildly. It's just you can't predict it.
Just say $2,000 a year and be done with that.
I don't even think that's the case, because there are some that are over 2,000.
Well,
they got
several claims before.
2,400, 3,000.
Shit.
So, and I mean, I'm sure you can elaborate a little bit more on that. What are you seeing on a daily basis? What's the average quote that you're writing per day here in the Hampton Roads area?
I would say probably it's creeping up to 2,000. It really is, and it feels like so much. I mean, I take it personally. We're a boutique office. We have, I'm the owner of the agency, but it means nothing. Like, you're talking to me. I'm writing up the quote, and I'm telling somebody that's going to be $2,000 a year, and I'm kind of shaky. I'm like, oh my God, this hurts. Like, it hurts me. Like, I don't want to pay that, but it's realistic, right?
Yeah.
We have some insurance companies, and we should talk about this, that are non-renewing, right?
Yeah.
They're getting off of stuff
Further down, but we're getting to it.
So we're seeing where people are having to start over, and their insurance, the first question is, well, wait a minute, what did I pay this past year? Oh, well, you paid $1,400. Yeah, $1,400 seems pretty good, right?
Mm-hmm.
And I'm like, well, it's going to be $1,900 now. You know, and I've shopped this out. This is realistic, and that's the difference for sure.
Quick question before we move on. Now, do you deal in the commercial side? Like, for example, somebody owns an apartment building and they need insurance, and because I would imagine if their rates increase, they're going to pass that, because just like you were explaining before, it's a profit and loss for-profit business. So is somebody who's an investor in a landlord and owns like an apartment building. So it's a profit and loss type of situation. So if their insurance goes up, likely they would pass on the rental increases to the tenants, would they not?
Yeah, I would say that's probably the reason why a lot of places or a lot of people are seeing an increase in their rent. There's a very good possibility that plays a lot into it. And then even here recently, the state of Virginia is trying to actually limit how much your landlord can increase your rent by.
I think it's like after the third year that they can't do it anymore, but there's just ways around that. They just won't renew the lease.
Yeah, they'll say, no, we're not. Yeah, you got to go.
Yeah, and we'll just, or you'll have to reapply.
Somebody else is ready to rent it, and they'll pay $300 more a month.
That's exactly right.
Yeah, that's the way around it.
Well, I mean, that's just simple economics, right? You know, insurance rate goes up, taxes go up, insurance rates go up, your utility bill goes up, all the things that the landlord's covering. And
carryover costs.
And so, the rent has to go up. And, you know, I think rent is going up by supply and demand right now. And I don't know, I have a lot of clients that are investors. I got a lot, you know, and it's, you know, you said apartment buildings, rental houses, same thing, you know, and the rental, you know, a home insurance policy for a house that's a rental, which if everybody's listening, if you own a house and you live there, and then you move and buy another house, but you keep that house and it becomes a rental, you got to change your insurance. I don't mean to segue there, but man,
That's important.
No,
it's a big deal.
That.
It's a big deal. It's important. It's important for people to know that, because it's a you know, it covers the same stuff, but it's a different policy. And the insurance company, you know, if your tenant burns the house down, and then the insurance company goes, well, wait a minute, you don't live there anymore? What? That's not the deal we made. And insurance companies, they're there to make money.
Yeah, they're not there to lose money.
You know, I mean, you know, I sell insurance for a living. I'll be the first one to tell you, insurance companies are assholes, right?
Yeah.
I mean, that's just, you know, like they kind of have to be. You know? They can't. It's not a charity,
right?
So
it's a business.
It's a business.
So for our listeners out there, is there anything that they can do on their own in order to try to help get their rates down, get the amount that they use down? Like, what are some pieces of advice that you can give to somebody out there right now who's like, man, I really want to get my insurance down some? What would you tell them?
Sure, absolutely. So, you know, there's not a magic potion or something, right? But the things that insurance companies are looking for, you know, and
trampolines lower the cost of insurance.
Well, you know, most insurance companies don't want you to have a trampoline at all. So, you know, that's sort of a non-starter. But, you know, one of the things they look for, and it's not going to make an instant, you know, like an instant difference to your insurance. You know, you can make sure if you have an alarm system, or you getting a discount for that.
Yeah.
You know, package discounts, you know, the bundle, right?
Yeah.
Patrick Mahomes, the bundle, right? You know, get your auto insurance in with the same company that you got your home. You know, makes a lot of sense. Insurance companies, you know, and we're in this market now where we are remarketing so many clients. Either they're being non-renewed, or they're complaining, you know, asking, help me, my rates have gone up, what can we do? And we're remarketing. You know, the very first question out of my mouth is, how old is your roof, right? So if your roof is old, your insurance is going to be more expensive. Your insurance is at risk for not being renewed because of the condition of the roof. That's probably the biggest conversation we have every single day, is talking about the people's roof. So if you had a brand new roof, they love you.
So if you
Big
just
discounts.
put a roof put on, you should call your insurance company
Yes.
and tell them.
That's a good way to put it. If you
There you go.
happen to put on a new roof, let your insurance company know. They can give you a discount.
Good. I need to make that call.
Yeah, for sure. When I started in the industry 20 years ago, 20 whatever it was, $500 deductible of your home insurance. That was normal. Every once in a while you'd see $250 deductible. And then it became $1,000 for a long time. $1,000 deductible, no problem. Now, 2,500. People are going to 2,500. Helps keep down the nuisance claim. Creates a situation where you are having a conversation. We're having conversations with the clients like, take the higher deductible. You really shouldn't be using the insurance for the little stuff anyway. If you have a $40,000 claim, $2,500 is not really a big deal. Might even kind of disappear in with the maybe it doesn't cost this much to fix it or whatever. But that's a big deal. The other big deal is the wind deductible. Okay, so we're coastal. Here in we're in Virginia. I know we're talking to everybody out there, whoever's listening. But if you're in a coastal environment, and coastal for here goes all the way up to Newport News, Yorktown, Gloucester, Hampton, Norfolk, Virginia Beach, you're going to have a higher deductible more often than not for wind or hail. And then it's interesting. So then it's a percentage of what the house is insured for that dictates what the deductible is. So an obvious, easy one is a 1% wind and hail deductible. House is insured for $300,000. You have we have a thunderstorm, blows off some big branches, busts up the roof. Your deductible is $3,000. Okay, and then it's all the proof is like it's all in the wording. So and all the insurance companies do it differently. Some of them say hurricane only. Well, I like that because, knock on wood, I don't know if this is really real wood here.
Oh, it is.
Oh, it is.
Nice. So if it's hurricane only, the tornado they had in Virginia Beach last year, was that last year, year and a half ago?
Something like that.
That was a couple years back.
Yeah.
It was scary.
If you have a hurricane deductible, no big deal. That counts as just your regular, probably $1,000 deductible, maybe $2,500. Not a big deal. But if you had the wind and hail deductible, all right, now it's 1% of what your house was insured for, 2% of what your house was insured for. Those were some pretty nice houses over there on the golf course, right? $450, let's just say $500,000 replacement cost on the house. And let's say you had a 2% wind and hail deductible. Well, that's a $10,000 deductible. And you need a new roof. It's $20,000. Well, you're basically splitting it with them. So for as a homeowner, you need to be aware of it. So it's maybe the best deal you can get is the 2%. And okay, well, at least But maybe also you say, okay, well, listen, that one over there, that policy over there has got the 2%, and it's $2,000 a year. But the one over there's got a 1%, and it's hurricane only, and it's only a couple $100 more a year. I kind of like that one better, because if you're going to need the insurance, it's especially around here, with the hurricane potential, tropical storms, nor'easters, we get good thunderstorms, probably going to be, that it's a good chance that that's what's going to be what causes a claim for you. So deductibles, wind deductibles, it's a big conversation there.
Got it.
So I got a question. So back to the viewers that might have mortgage and home insurance, and they see that their rates are rising. They are not pleased. They want to shop around. Now that they're paying their mortgage payment and it goes to an escrow account that pays that home insurance, how easy is it to switch insurance companies? How does that handled on your side?
It's pretty easy. There's a few hoops to jump through. Changing at your renewal date is certainly easier. If in a perfect world, you start your search 45 days in advance before your renewal date. And if you're really on the ball, you'd call your mortgage company and say to them, hey, listen, I'm thinking about changing my home insurance. Please do not pay my current home insurance bill until I call you back and tell you what I'm doing. And they'll, unless they screw it up, which I've seen them do, they'll put a little hold on it. You do your shopping, and then whoever the new insurance company is, they'll send the new paperwork. Maybe you call back the mortgage company, say, this is who I'm going with, and then we send the bill, nice and neat, no problem. Doesn't usually go that well. Maybe they pay your current company before you get a chance to let them know. Not the end of the world. You end up switching, cancel the other policy, mortgage company pays the new one, you get the refund from the old one, you put it back into your escrow account, and everybody's cool. You won't see an immediate change in your monthly mortgage payment. So you have your escrow analysis, which the mortgage company does every year. And so if you're thinking, oh man, I'm psyched, I had a $2,000 insurance premium and I just got it down to $1,500. Well, it's great. You won't see that right away. You will see it eventually once they do their analysis, and then your rate will come down. So it's not a instant gratification.
Okay. All right.
Where do you see the insurance market here in the next 5 years? Like, do you see this continuing to go up? Do you see it going down? I know you
Not
said
going down.
Yeah, see,
Definitely not going down.
It's not going down.
so
It's not going down. I think that the insurance companies, and I'm certainly hearing this, they are taking the measures to get back to where they need to be. So they're bringing in enough money so that they are able to pay out the right amount of money. I think that it will slow down, these rate changes. We're seeing, we get reports on what other insurance companies are doing that are filing with the Bureau of Insurance, and it's no doubt, X company, 26% rate increase, 15% rate increase, 19% rate increase, 33% rate increase. Like in years past, it was, we're sorry, we're going to do a 6% rate increase. And everybody's, oh, God, you're killing us. Like those, in hindsight, man, those were great.
yeah.
Yeah. Legitimate. They are making hard decisions and saying, yeah, it's going to be a 20% rate increase, 25%.
So do you think that we're going to see more natural disasters and, there's going to be higher interest rates? At some point, does this become not manageable anymore?
All right, so Florida insurance is a disaster down there, right? You companies are pulling out, companies are going under. You can't
I heard
you can't
some companies
find
won't
it.
even insure Florida at all.
Very few will. You've got in North Carolina, right? So we do some business in North Carolina. So on the Outer Banks and in eastern North Carolina, a lot of insurance companies exclude wind. So instead of having a higher deductible, they just don't cover it. And then you buy a separate wind policy from the state. So the state has an insurance program that they have figured out their rates, and it's subsidized
By taxpayers.
Taxpayers and insurance companies.
Okay.
It's actually
It's going to be taxpayers.
It's complicated. Insurance companies to be allowed to write business in the state of North Carolina, like an admitted company, right? So you don't know what I'm talking about now. So
Legit company.
that's right, a legit preferred. So to do business in there, they have to take some portion of their premium and put it into the pool for the wind. So you got a beach house on the Outer Banks. You buy 2 home insurance policies. One, your regular fire, water
I don't want a
damage,
beach house anymore.
vandalism, and then you have a separate wind policy. And that premium's going to the state. And in Florida, they're doing that. In Florida, it's called Citizens. I don't sell in Florida, but it's certainly a lot to talk about. So you hear about that. So,
But, is it legitimately possible that the insurance industry in Florida, let's just pick on Florida because we're talking about them right now.
Mm-hmm.
Is it possible that it becomes unmanageable? Because, listening to how you explain insurance to me, I, remember a famous quote that I was told when I was younger. It was called, "You rob Peter to pay Paul." And that's how I view insurance now after our conversation today. So thank you, Rob, because I feel like you said it so eloquently that we're pooling everybody's money
Like
together.
a mutual fund.
Yeah, we're pulling everybody's money together. But, legitimately, is this a situation where certain states just may not be able to have homes in those areas insured?
it's a big question. I think that I think there's a high chance, and it's already happening, that the government is stepping in to help, right? They're already governing. They're helping with the wind policies, and you could see where they'll come in and because what are we going to do? Are we just not going to insure houses?
I imagine they're going to probably put another
Something's gonna
tax
happen.
in place, like a hurricane tax or
well,
a wind
A
tax.
tax.
I'll
and
tell you
then
what,
get a
I don't want
subsidy.
my insurance to go up to cover Florida, like, or anywhere else. I mean, my uncle lives in Hawaii. I love my uncle to death, but you're in the middle of an ocean. Like,
Yeah.
you're choosing to live in the middle of an ocean. That's a body of water. Like, I mean, why would you do that? And same thing with Florida. You continuously every year get hit with hurricanes. Why would you stay there?
It's a good question. It's a good question. You know, it might be that it, and sort of like we were talking about, there's two separate policies. It might end up being that where we end up with the government has to subsidize all these weather-related events for the insurance. So flood insurance, which we should do a separate, podcast conversation about flood insurance.
It's a whole new
A whole
conversation.
new thing. I mean, don't even get me started. But
No, we got to get you started because I
flood insurance is
I got one question for you on this.
flood
Let's see where it
insurance is
goes.
a FEMA program.
Yeah.
Like, I mean, 90% of the flood insurance policies in the United States is a FEMA National Flood Insurance Program insurance policy, because in the 70s, the insurance companies said, "We're out, man. We can't get enough premium to cover the losses, because when there's a flood, every house goes."
Yeah, the whole house.
And that's that's partially what happens in Florida every time there's a hurricane.
That's right.
floods,
That's right.
massive flooding. Now, here's a really good question for you. Is there a contingency plan, right? You hear a lot of theorists, and some of it may be conspiracy, who knows, but that talk about global warming and the ice caps melting, and sea level rising. Is there a contingency plan with the insurance companies for what happens if the sea level just happens to rise 10 feet and flood inland the coastal areas?
We're screwed. That's the plan. We're screwed for sure.
So there's no contingency plan.
Not that I'm aware of.
So
Not
if
that
you
I'm aware
live on the coast and you just wake up one morning and the ocean is right out your front door, that you're
God.
dealing with it.
Yeah. Oh, yeah, for sure.
Yeah, because I saw those news reports of all those floodings in Florida, especially by the coast, and you had like exotic sports cars floating in the garage, and those things are like what, over almost $1 million,
Some of them.
or maybe more. So the insurance companies had to cover for those sports cars plus the structure.
You guys are paying for that.
Yeah, that's what I just said. I feel like this is robbing
your
Peter
auto
to pay
insurance rates
Paul.
just went up too, didn't they?
Sure did.
So they're all connected. The home
Same
insurance,
thing.
auto insurance
Well,
industry.
they're separate but same, right?
Oh,
Yeah, because
For
it's
sure.
a lot of bundling. That's partially, I think, the reason why they want you to bundle everything together. Keep it all with one company.
More premium for them is
Oh,
really
yeah.
is their goal.
More money
there.
for them.
revenue stream.
Yeah.
Yeah.
So, yeah, I'm not sure. I'm not too sure I like insurance anymore. I mean, I realize there's a necessity for it, but
Maybe it's a necessary evil.
that's exactly what
Like
I was
real
gonna say.
estate
You
agents,
took the
kind
word
of a
right out of my
necessary
mouth. All
All
right.
right.
I'm good. I don't have anything
You got
else.
anything? You got
Yep.
anything else before we wrap up?
Gosh, I don't know, man. It's y'all got me started on that. That's good stuff. I don't know. It's insurance. What are you gonna do?
Yeah.
You need it. You have to have it.
It's like you can't live with it. You can't live without it.
Yeah.
You know?
Well, until next time, maybe we'll talk again. Everybody, if you like this video, go ahead and hit the subscribe button, leave a comment, give us a like button. Let us know what you think in the comments section below. Thanks for watching. See you soon.